Welcome, you who is joining us right now, Fortune Builders community, but I know you're sitting alone, so I'm not going to refer to everybody in plural here. But it's good to have you here. This is a special ongoing series that we do for the Fortune Builders community because JWB is essentially one of the passive investing arms of Fortune Builders. Greg, you were kind of like one of the first students of Fortune Builders, and you've been building up this relationship with them and working with them for like 19 years?
Absolutely. How special is it that two organizations could be literally kindred spirits, brothers in real estate, really, and it's going on 20 years now. So yes, 20 years ago, I had the pleasure of meeting Than, Paul, Conrad, Paul Shively, Jeff, everybody at the Fortune Builders team. But it was before Fortune Builders was the name of their company, even. They were busy successfully building a real estate company called CT Homes, which of course they operate today. But they were thinking about teaching others to do that. And when I had that opportunity, I saw that they were thinking about it. I approached them. I said, hey, can you teach me everything? And they said, yeah, come on, you can be our guinea pig. So yeah, that was 20 years ago. And now we get to continue this education series and work with so many Fortune Builder students. It's a real pleasure.
And we see a bunch of, so we host this show every single week. By the way, my name is Pablo Gonzalez. I'm the host of what is the Not Your Average Investor Show. It's the JWB podcast. I run this series with Greg, who's the co-founder of JWB. I affectionately like to call him GC on the show because he generates cash flows, knows how to, what is it? Because you got the genius concepts. You know how to generate cash flow. You're a great co-host, and your name is Gregg Cohen, right? And here with you is, since you have been serving the Fortune Builders community for so long, we have many folks that come to our show on a weekly basis, part of our community, such as John Henning, who's in the house. We call him the leadoff batter of the Not Your Average Investor community. Suzanne Parker is a good friend of ours as well. Leslie Wilson, who we call the Maven from the mountains of Denver. John Williams, El Maestro. We have a bunch of good friends here that are. Pamela Myers, our favorite smile in the Pacific Northwest.
Of course. Vincent Barber, right?
Vincent Barber, the man of steel. We like to give people nicknames inside of our community. But just because you don't have a nickname yet, we want you to be a part of this and join us on Tuesdays if you have availability. Tracy, I'm talking to you. Welcome. I hope you're having a good time with this. Carolyn, good to see you here as well. And anybody else that's new to this. So Grace, nice to see you. Audio, please. Grace, can I get a mic check from everybody? Can everybody hear us okay?
I certainly hope so.
I certainly hope so. Okay. Yes. It is working well. So Grace, I don't know if you can hear me, but it might be on your end. So that being said, you talked about the length of the relationship. I'm just going to talk about the depth of this operation here, right? So Greg and his partners have 120 employees here.
We're up to 137, actually.
137. I was way off.
You were close.
I apologize. 137. But more importantly, you have 6,000 doors under management from portfolios of investors like yourselves, like me. I am a JWB investor as well, where you have been able to service the busy professional that's trying to grow a passive portfolio and not have to do everything themselves and retire differently. And you've happen to build a really, really attractive company with over $1 billion under management. You're developing downtown Jacksonville as we speak. You guys are city builders these days. But this is your bread and butter, right? This idea of bringing a cash flowing, performing single family home to market for the investor that doesn't want to do it all themselves. This is what you guys have been built to do.
100%. I mean, we were blessed early on to learn about the fundamentals of successful rental property investing through our Fortune Builders education and our mentors. And what we quickly realized is that this asset class is so beautiful, but the thing that is holding more investors back from this beautiful asset class is the experience. It's the experience. It's, everybody has heard the horror stories of whatever being a landlord might be, and it keeps so many people from this beautiful asset class. So my business partners and I and our entire team over the last almost 20 years now, we have built a business that is totally focused on helping everyday investors invest in single family rental properties. You can do it from anywhere in the country, anywhere in the world. We actually have investors from 13 countries and 49 states. The only state we do not have an investor would be West Virginia. So if there's let me know. If there's anybody in the chat from West Virginia, let me know.
Highly motivated.
I'm secretly rooting for you to become our next investor. But yeah, so this whole journey is about how do we take this asset class that can be sort of complicated, can be kind of hairy at times, that largely was not professionally managed back in the day over the last 20 years. And how do we make that easy and enjoyable so that people have a smile on their face when they're talking about their rental properties, and that they want to continue to buy more, to build their plan so that they can retire or they can accomplish whatever financial outcome is important to them. And that's what we've been able to do now. We serve thousands of clients. We have over 1,700 clients. We manage over $1.3 billion in real estate here in Jacksonville. And I own over 400 rental properties. So I'm right there with you and with all of our clients. I know exactly what it feels like to be able to run a successful rental property investment. And I also understand what it feels like when it's not run well. That's what we learned on early on in the beginning. And, you know, when
19 years ago.
Yeah, exactly. And when you sit in that seat and you know those pain points, you can then build a business to make sure that you solve for those pain points. And that's what we've been lucky to do.
So one of the big pain points that we have found, right? We host this show every single Tuesday. It's live. Let us know in the chat, like introduce yourself to the rest of them. Let them know if you're a JWB investor or a Fortune Builder student that is here, just kind of like checking things out. Would love to know in the chat. But one of the things we talk a lot about on the show is this idea that most folks kind of go at this the wrong way, right? Like we talk about there's this like over obsession on finding a property when really, you know, you buy a property once, but the team that manages it is going to manage it for 10, 20, 30 years, manage it for your kids, all these different things, right? So like finding the team to create the right experience is something that we rail a lot about. But then people still want to be like, yeah, but how do I pick a property, right? So, so we are right now going to show you essentially the way that JWB has designed it so that investors like yourselves have a good experience, so that you can put this filter on wherever you're looking, wherever you're doing. This is the way that you want to think about it if you are trying to be that passive investor that grows a portfolio and has success with it. So we call this how to pick the rental property portfolio for you. No, how to pick the right rental property for your portfolio. I knew picking and properties was somewhere in there.
You're a big fan of alliteration. I tried to give you as much alliteration as I could for the title.
You did. You got 3 P's, 2 R's, Pablo. I'm a 4th P. All right. So that being said, look at that. Everybody's checking in here. So Man of Steel, Vincent Barbright, both Fortune Builders and JWB. Will Horry, Edgar Gonzalez, my cousin, D. Perry, Leslie Wilson, the maven of the mountains of Denver. Barry Gordon just made a deposit on 5 properties for JWB.
That's right, Barry. Congratulations.
You,
That's so
That's
wonderful.
awesome.
The team's so excited to have you.
That's awesome. Love it. So you are all surrounded by folks in your community and our community. It's overlapping. And we want to just make it very, very clear that this is a service that you have already invested in, right? Like everything that JWB does for folks is not like an add-on. What Fortune Builders has done is just found the people that they can stand behind in order to handle this type of thing for you. So we're just sharing the secrets, and you're going to be invited to participate here as much as you'd like. But for right now, we are going to go over some real numbers, right? So there is a disclaimer that we got to do for all these kinds of shows that say you got to do your own due diligence. Future performance not based on past. I don't know the legality here. Just,
I think we're all big boys and girls here, right? Anytime you're making a decision where you're going to invest hundreds of thousands of dollars, make sure you do your own due diligence. Understand that the numbers we share with you are estimates. They are not guaranteed. There's risk in every investment, and Pablo and I are not financial planners. We're not offering financial advice. So surround yourself with those who you trust when making a great decision, and consider this a start for some of you in your education journey, and for some of you, hopefully you keep on coming back to this educational series.
Got it. And that being said, like we said, this is for you. If you want to take your next step, you can do it many different ways. You can call JWB at 904-677-6777. If you want to just text right now, they can get back to you at 904-293-0341, or you can go to jwbrealestatecapital.com/Fortune Builders and schedule an appointment. But Elizabeth is asking, please get to the point and illustrate the software that is supposed to be the point of this thing. Well, Elizabeth, I got good news and bad news. We are going to get to the point, but we're not showing you a software. We're showing you a process, a lens of like how you're going to want to like go through picking properties. And then Gregg's going to open up a spreadsheet that he uses to advise people and kind of talk you through it. But first, Where do people generally go wrong when they're started in this?
You know, I've had the opportunity to speak with thousands of investors, and you see this over and over and over again. Everybody, once they build up the courage to invest in a rental property, the only thing that they think right off the bat is property, property, property. How do I see the property? How do I make this transaction? And what we want to do, what I have seen, what I learned very early on, and I've seen now through thousands of iterations, is that we need to flip the order of operations when it comes to making a decision to be a successful rental property investor. Most people think property, pretty much that's all they think of. Maybe they might think about the market. A lot of times nobody ventures out beyond, their local market, but if you are taking a step in the right directions, you may think about the market, and very few people think about the team, the property management team. And what we do a lot, and for everybody who's on the call today, you can think of this as sort of your introduction to what it would be like to get on the phone with JWB. In our very first call, we're going to talk about flipping that on its head. And we're going to talk about how important number one is the team, number two is the market, and then number three is the property. And if you do number one and number two well, you're going to do number three very well. It's going to be easy, enjoyable, and you'll be set up for success. So we got to flip that on its head. Again, it's team, market, property. That's the biggest thing that we try to talk about, especially with newer investors.
Got it. So that being said, I remember my first JWB property. I came in guns blazing, wanted to take a look at like, what am I going to buy here? And it was like, whoa, hold on, right? I was explained that this is going to be a 4-call process. You want to make sure that everybody is on the same page here. We're setting up a long-term relationship. And I remember my first call was really just kind of like, is this even right for you, right? You see, is that kind of like what call 1 is about?
Absolutely. We are trying to step so far away from transaction here because this needs to be a relationship for this to be successful for you. Because you need to have somebody who thinks about your relationship, who understands what your goals and your resources and what your desires are as far as your outcomes, in order for us to best serve you. So this first call is about establishing that relationship. And we're going to ask a lot of questions. Is this the right fit for you? Is this the right fit for JWB as well? And we've done this enough to know what are the signs that it can be a great fit. So in our conversations, in our questions, we'll ask questions that we want to get to the point of, hey, are you a long-term investor? Are you a flipper, right? Are you thinking about buying and holding this asset for a full market cycle, or are you trying to buy low and sell high tomorrow?
Why does that matter, GC? Like, am I not going to just like make my money on the buy anyways? Or why do I need to like think differently if I'm going to be a flipper versus a long-term hold guy?
Well, you know what? There's nothing right or wrong with either. Both can be highly lucrative. It's just, what is this model built for? Who are we here to serve? And we are not here to serve those that want to buy low and sell high tomorrow, because there's a certain set of risks that go along with that. There's market risk, there's interest rate risk, there's experience and the risk that it actually takes to complete that. And that's just not who we are here to serve. We're here to serve those folks who say, you know what, I've got my active business. And many of you in the Fortune Builders community are super successful active real estate investors. But those active real estate investors say, you know what, I also want to build myself out of that lucrative job. And the way that they say I want to do that is I want to build a portfolio of rental properties, and I want it to be completely hands-off. And I want the best professionals to manage everything for me. And I want it to be in the ideal market for my money to grow as well. Those are some of the talk tracks that we are looking for. Those are some of the questions we're going to ask. And, if it turns out that, long-term is not what you're thinking of, if passive is not what you're thinking of, that's okay. But it's really important for us. And we think it's a service for us to ask those questions and let you know that we might not be the right fit for you very early on. And so that's what we use the first conversation to do.
Okay, got it. So if I am an investor that's looking to buy and hold long-term, right? I would hope that anybody that I'm going to deal with is going to first make sure that this is right for me, right? Like, this is a long-term relationship, right? So I don't want to like go out on a first date and then go marry somebody or have a kid with them, right? And this is at the end of the day something that you're holding for like 10, 20, 30 years when you're thinking about rental properties. So
Yeah.
the idea of like, are we right for each other is the first conversation you should have when you are talking, when you are talking team first, right? Got it.
Lose your train of thought a little bit there.
Yeah. But then the next thing we talk about is market, right? Like you want to talk market.
Yeah, absolutely. So in that first conversation, look, the idea of investing in a growth market has to be really attractive to you. You know, Jacksonville is where we operate in. That's the only market we operate in. And the reason we're so excited about it is because Jacksonville has some of the strongest numbers that when it comes to home price appreciation, and we understand how much that relates to making you more money over the long haul as well. And so in order for you to get excited about wanting to do business with us, because we only serve Jacksonville and we think it's the best market, Jacksonville has to make sense for you. You have to see this and be excited about the growth and the home price appreciation that comes with a market like Jacksonville.
Got it. So that's call number one. Elizabeth, it sounds like you might not be looking for what we are talking about today, right? Like this is the process, right? If you are trying to invest with a long-term buy, these are the conversations that you need to have. So we are going to take you through the process of like how to think through this, and then we're going to get to the tool. So like,
I think you're going to be blown away when you see how easy it is for us now that we know how, when we understand that we're aligned from a goals and a resources perspective. Elizabeth, I think is it Elizabeth?
Yeah.
Elizabeth, stick around for like a few minutes. I'm going to show you this tool. I'm going to show you how easy it is to select the right property.
Got it. So that being said, after call one, right? So this is like, understand that you're in the right asset class. What happens next before you get to that portfolio generation?
Well, so then once we understand that there's a potential fit here, we want the same things. The next step is for us to have a phone call. Well, actually what we're going to ask you to do before the next phone call is we're actually going to ask you to do some homework. We're going to ask you to write those things down, which is sometimes hard for some folks, but absolutely is beneficial when you're thinking about really important goals like retirement or sending your kids or your grandkids to college or living a lifestyle that you truly want to live. You know, it's important to write these things down for you, and it's really important for us. If we're going to do a good job as you know, in serving your goals, we're going to need to know what they are. So we're going to ask you to do a little bit of homework. It's called the Goals and Resources document. We call it the GNR. We're going to ask you to fill out the GNR before we get on the phone the next time, and then we're going to set up that next phone call. That next phone call is super fun because now you're prepared. You've organized your thoughts. You know what you're working towards, and you've also laid out the resources that are going to accomplish that. So this next phone call, the second phone call, is all about what is the desired outcome that you have, and how are we going to help you get there?
Got it. So I remember my GNR, right? So one of the few pieces of homework that I've ever enjoyed doing, right? Because you sit down with my wife, right? My partner in life, and just kind of like talk about what we're trying to do. Like, what are our goals? Why are we in this thing for? Leads to really, really good conversations. And then we start like taking account of like, how much money do we have? What are our resources that we have available? GC, you pulled a recent GNR here that we can kind of go over so people can see.
Absolutely. And I think that's part of the beauty of this call as well, is you're getting a behind the scenes look, and I'm using real GNR, real client goals. And I think some of you will relate to this. I'm also going to use real properties that are available right now to show you how we will construct the perfect portfolio for this client. And I think everybody can kind of put themselves in those same shoes. So this is a client who just came to us somewhat recently. She was a part of the continuing education series, and she just closed on her properties within the last couple of months. So a great example. And, you know, obviously we're going to keep her personal information out of here, but you can see she's 36 years old. And we always ask, you know, what were the original reasons that got you excited? What is attracting? What goals are we sort of trying to accomplish here? And, you know, as you can see that she was recommended by a friend, spoke very highly of the experience working with JWB over the years. And then, of course, doing her due diligence. You know, that's related to all of us as fortune builders as well. There's a reason that Fortune Builders has referred over 1,000 clients to us over the years. So that power of that referral is really, really important. So we're going to ask some of those questions right off the bat. And then we're going to work our way into the more kind of objective and measurable goals and of course, resources that we have to accomplish these things. We're going to ask you to define a monthly passive income goal. And, this is kind of hard for some folks.
Yeah.
Maybe you haven't thought about this. So whether you have it and it's easy for you to write down, or whether you need a little bit of help through writing this down and then jumping on the phone with us, we're going to help you do that. And we're going to try to end that phone call saying, okay, cool. Now we know we're here for early retirement, or we're here for saving for healthcare costs, or whatever it may be. And this is what JWB needs to accomplish in terms of a monthly passive income goal. Here for this client, you can also see that her goal was retirement, and she wants to retire in 10 years. She's doing quite well with her W-2 income and has excellent credit score. Those things help us understand how financeable the client is. Also, it gives us an understanding of how many properties this client really should have, meaning if their income is very low and we might not have the capital to invest today. Super excited to have that phone call. Might be a few years from now or whatnot. We're going to build that relationship. We're also looking at things like reserves, right? If there's a client that doesn't have the income to support it, we want to make sure that we're not just filling this portfolio with properties that, might not have the reserves or the proper cash flows to be able to support it.
Greg, you talked to this client, right?
Yeah.
10 years to retirement at 36, and she's going to retire in $5,000 a month.
She's got money in other places.
Okay, cool. So this is part of a bigger strategy for her, which
Absolutely.
is pretty normal for people, right?
Absolutely.
Okay, that's what I thought. Okay, so talk us through some more here.
So then we talk more about the resources that are specific to this plan. So again, we're going to ask you guys all these questions. If you reach out to us, call us, text us, whatever, these are questions that are super important. Number one, how much capital are you looking to invest? You probably would have expected that question would be asked. We're going to ask about the liquidity of that capital right now. Sometimes the money is just sitting in a bank account. Sometimes the money might be sitting in properties elsewhere that you may be looking to redeploy, maybe through a 1031 exchange or a cash out refinance. Important for us to understand those things so we can time this appropriately for you. And then we're also going to keep an eye on the future, because a lot of you come to us with really big goals. And it is our job, if you come to us with a really big goal, to help you understand if it is somewhat realistic. And so we're going to understand that, listen, if we are trying to retire in 10 years at the age of 46, and if we want to build up a passive income goal of $5,000 a month, and we only have $70,000 that we're planning on putting into this thing, it might be slightly unrealistic. So we're going to keep an eye on the future. How much additional capital are you planning to contribute in future years? And we help people see, you already kind of plan for additional capital in other investments. We call it a 401k, right?
Yeah,
you already set money aside in other investments. Well, this is another retirement plan. And for many of you, the idea of planning ahead to put that additional capital contribution is something that is quite normal and something that we share early on.
Got it. So as we advertise this idea of like how experienced investors pick property portfolios, you don't rush straight into the property. You first talk about, is this the right asset class for you? Do you have the right expectations? Is this, is this process what you're really wanting to sign up for? If not, that's fine. You can just go, it's not going to be rental property, long-term buy and hold rental properties. Then you talk about your resources, what your goals are. And then it sounds like this is kind of like, you become not a person that's selling you a property. You're essentially building a plan for people, just like in any other asset class. You're used to somebody helping you plan to reach a goal based on how this asset class performs.
Right.
Before you talk about like, okay, now I want to get this one and this one and this one, right?
Yeah, and that's so critical. We do it in these other places that we put our money, but in real estate, it's really hard to do, and nobody thinks about it. If you go down the street and you say, well, how many properties do you need to own in order for you to accomplish your goals? People can be like, well, I don't know. How would I figure that out? I don't know how much cash flow I need and 10 years and tax savings and things like that. But after doing this thousands and thousands of times, we have access to that information, so we can help you.
Yeah.
And so what we do is we take those goals and resources. We then try to give a little bit of kind of education just about how to be a successful investor. And that's really where we break down the 3 phases of investing. So the 3 phases of investing, number 1 is acquisition. you're in your acquisitions phase.
Mhm.
That's what we'll focus on today's call as we break down exactly building that portfolio today. So that's what we're going to focus on today. But I did want to give everybody an eye for the future. And this is a part of your ongoing client service with JWB and as a part of the Passive Income Club. We're going to help you with phase 2, which is debt pay down. And then we're going to help you with phase 3, which is distribution and any potential tax consequences that may come at that phase. That's a really fun phase. You get to enjoy all the passive income you've earned. So we're like, okay, cool. Now we understand we've got a certain passive income goal. We've got these resources we want to put together. Now let's help kind of crystallize how many properties do you need to accomplish phase 1, which is the acquisitions phase.
Got it. So looking at it holistically, we're talking about acquisitions right now. But again, this is a long-term strategy where you're going to need support in the strategy, accountability to continue to like acquire and people checking in with you, advice on debt pay down so that you can accelerate when there's moments to accelerate if you can, right? Like this, a lot of the stuff we talk about on the show. And then finally you get to that distribution part, which is, when you've reached your goals.
There you go. So, and here's a little rule of thumb. This is for JWB properties in the Jacksonville market, but I think it'll help others kind of get a little bit of a sense of how many properties do you need to own. Because when we hear your goals, we're thinking, okay, cool. Let's break that down into a number of assets. That helps you understand, listen, do I need to buy 1,000 properties? Do I need to buy 2 properties? Well, it's likely somewhere in the middle. And if you know what that number is, then you can start to plan and work towards a goal. It's like if you don't set a goal, you're not likely to hit it.
Yep.
Part of this is to help you understand what that goal is for properties. And there's real numbers that help you understand what that number is. So like, for example, if you own a property, JWB, an average JWB property, we know that it's that property is going to kick off about $1,000 a month of cash flow. Now, what I'm doing in my head is I'm assuming the property is paid off by that point. Whether or not it's paid off is not important at this moment for you to understand what your target number of properties is. There's a lot of time to figure that out, and that's where phase 2 and phase 3 come in for us to be able to help clients. But just keep this in mind. About $1,000 is what a fully paid off property will put in your bank account in 10 years. And so if we know that with this client now, we've been able to take her from, hey, I have this goal of retiring in 10 years. I want to buy real estate to, okay, I'm going to retire in 10 years. I now know that each of my properties that I own is going to kick off about $1,000 a month of positive cash flow. So now I know I need 5 properties in my portfolio. And it's also cool to understand, you know what, sometimes clients come to us and they say, you know what, I thought I was going to retire in 10 years, but maybe 20 years is more likely, or maybe goals change. That happens all the time. Well, the beautiful thing about rental properties is that if you give yourself a little more time in rental properties, it just gets better and better. So you can see if you actually gave yourself 20 years to the goal, if you started 10 years earlier, you would see that each property would kick off about $1,750, which would mean to get to your target number of properties, you'd only need about 3. And again, if you really started early, which we love when folks come to us young, and you gave yourself 30 years, you'd really only have to have 2 properties in order to accomplish that. Your property would be fully paid off in 30 years, and you'd be receiving about $2,500 per property.
Got it. Sam Samander is saying, quick fact sheet on Jacksonville market would help compare with national average. Like, what's your home price appreciation versus everybody else? Sam, great idea. We talk market all the time here on the show. Jacksonville is one of the most attractive growth markets that also has cash flow. This webinar is just kind of like showing you the property selection and stuff like that.
But we can totally help you out and give you all that information, Sam. I would encourage you to send a text message. My words aren't exactly working here. Just send a text message to my team. We're happy to either give you that information or give you a video where we've already gone through some of that information as well. So the number is 904-293-0341. There's a human on the other side. It's not a bot. It's a real human. We're waiting to talk to you.
So that being said, you see, so we've talked through kind of like the goal. We're reverse engineering here. We know where you're trying to get. We know what the resources are to get there. We understand the asset class. That's call 1 and 2. You go through. Is there anything else that you discuss on call 2?
Oh boy. No, well, you know what? We're talking a lot about the plan. We're talking about the goals, talking about the resources, and we are making sure we're filling in any of the gaps that we didn't get to fill in on the first call.
Got it. So let's get to the juicy part. You want to share with us how you actually pick properties?
This is super fun, guys. If you think about the normal way that people invest in rental properties, many times it takes years to be able to do that, and you have to go and see properties and send in offers and get rejected. And quite honestly, did you ever really know how the numbers were going to work across all 5 profit centers when you bought? Well, what we have built here at JWB is within literally a few minutes, we can give you all that information and actually pick the properties with you. And so this is better than some fancy spreadsheet or some fancy platform or technology. You're going to get the expertise of a team that has done this thousands of times, and you're going to be a part of the process as well. So that's what we're going to do here today. And I guess it's time for me to share my screen and give it a whirl, huh?
This is time for you to give it a whirl.
This is the most nerve-wracking part of the entire show for me here
Greg
today.
is not a tech guy, and there was no other way but have him actually do this because he's actually the finance guy. So bear with him.
We're going to give it a whirl here, guys. We're going to give it a whirl. All right.
All right. Move that thing to the top over there. Yeah.
There we go.
It's like talking to my dad.
Oh my gosh.
Get your screen, get your thumb thing from there. All right. Here
There we go. How about this?
That bar's going to go away. All right. All right. Everybody can see it good?
All right, everybody. That wasn't too painful.
Not too painful. Well, it's TBD, buddy.
So guys, this is your investment plan. And you know, what it's going to show you is, number one, how is JWB going to make your money grow through investing with JWB here in the Jacksonville market? And then what we're going to do is break down the individual assets. You can kind of see here the ones that we're going to start with here. And then I'm going to pick and choose the assets to show you why did I choose the right one for this client. So we're going to go through all of it. We're going to be able to kind of see everything that goes into the plan. Lots of numbers here, but I'm going to kind of zoom in as best I can.
What is there, that black box there? I don't know.
I don't know, bud. We're going to have to just wheel and deal.
Just wheel and deal, buddy.
So here's what we got. We're going to start right off the bat. We've got your client information here, and we understand that this client, because of sharing the goals and resources with us, this client has about $70,000 to invest with JWB. And at the end of the day, I want to separate a little bit of the fact that you're investing in a property. I mean, clearly we're investing in individual properties here, but I want you to see this very much like you see your money in other places. When you go to other places, you don't have as much emotion into it, right? And in a house, we have to separate some of that emotion. I want you to go into this plan and say, you know what? I'm going to put this money in, the money's going to grow this much, and this is what my portfolio is going to be worth when it's all said and done. So what I wanted to show everybody here, and what we show clients right off the bat, is even though we are not going to be buying 5 properties right off the bat because of the budget that the client gave us, it's important for you to see what the finish line looks like. And so right off the bat, you're going to see with 5.
So to remind everybody, this client needed 5 properties to get to her goal. So the first thing you're going to illustrate is like, what does 5 properties look like so we can reverse engineer?
There you go.
Right,
there you go. Because that's the exciting part as well, right? You're in this so that you can grow your money in a risk-adjusted manner. And it's important for you to see just how much this is going to grow. Because guys, a lot of you are doing this for early retirement. And the numbers, when you invest, buy and hold in Jacksonville real estate, and you start to look at what it's going to be worth in 10 years, retirement's possible now. Retirement's possible. So here what we'll see is for this portfolio that I put together, which we're going to take a little bit more of a look at here, the investment, the total initial investment is about $350,000. By buying and holding with the right team in the right market, that portfolio will grow to about $907,000. And the rate of return on that portfolio is a little bit over 10%. So the money is growing over 10% year over year over year. And it's doing it in a way which is diversified. All right. So now we're going to take a little bit of time and talk about how did we get to that growth there of almost $558,000 worth of growth. Well, we do it through 5 profit centers. And so this portfolio, right off the bat, you're going to see this portfolio is going to be is going to grow through those 5 profit centers. We have net rental income, we have tax savings, we have principal pay down, we have home price appreciation, and we also have inflation hedging and inflation profiting. And if you'd like more information on those 5 profit centers, again, reach out to my team. We have additional education and training that's available for you. Or you can continue to come to these education series or to our show, the Not Your Average Investor Show.
Got it. And Leslie's saying she loves the 5 profit centers, right? I think when most of us got into this, I know that when I first started thinking about rental properties, everybody was just like, what's the cash flow? What's the cash on cash return? Like, what are you going to make off of this? So you're really just thinking about that cash flow when there's really these 5 profit centers, right? Like, first of all, home price appreciation, we've learned show after show after show that we do is the biggest profit center, right? So like the majority of your wealth when you buy and hold is going to come from home price appreciation. When you lay out all 5 profit centers on a pie chart, the home price appreciation looks like the Pac-Man and everything else looks like the mouth of the Pac-Man, as you see here.
There you go.
And this is just like a very different approach than anything most people see, because they're generally just thinking, oh, okay, well, like, here's my short-term cash flow. I might know what my long-term cash flow is, but kind of this like holistic view of like the wealth that you are creating, which leads to a bunch of other interesting outcomes, I think is a really cool part of this.
100%. And again, there's a lot of conversation we have. You might be familiar with that concept, you might not. We're going to help you understand. But at the end of the day, after managing billions of dollars of real estate and reporting on it every single month and looking at how success has actually happened, what we see, as Pablo mentioned, is that between 60 to 80% of your wealth pie comes from home price appreciation. No matter when you bought, no matter how you bought, at the end of a buy and hold cycle, of a full market cycle, you'll find that 60 to 80% of your wealth will come from home price appreciation. So if we know that, we have to choose a market and a team correctly. You have to choose the market correctly because you have to be in one that's going to grow.
Yep.
And we know which ones grow because we look at history and we look at population growth. And obviously Jacksonville wins there. But you also have to pick the right team because this is not get rich quick and you need to be in this game to give it time for it to work. And if you don't have the right team, you will never last. You will have so many headaches and so many hassles that it won't matter to you. And because you know what? Rental properties can be a complex thing. You have families living in your homes. You need to treat them well. And it's not just a financial instrument. So you got to have the right team, the right market. And this Pac-Man principle that we call it, this wealth pie that we're talking about is so critical. And you can see here right off the bat. And that's why we're putting you in this portfolio in the Jacksonville market.
Got it. All right. So now we're looking holistically at your goals and how you're going to get there. We're showing you a holistic return kind of like profile, but let's look at the inputs, GC, right? Like at the end of the day, it comes down to inputs, right?
Absolutely here. So here's just a little bit of information as to why I chose these 5 properties, right? The first thing that we do when we analyze the right property for a client coming to us, we follow a 3-step process. We look, number 1, for highest returns on investment. Number 2, we look for positive cash flow in both year 1 and the horizon year. The horizon year in this case would be 10 years because this client wanted to retire in 10 years. So again, number 1, highest returns. Once we've looked at that, the next step is positive cash flow in both year 1 and 10 years. And then number 3, we have to work within the budget.
And why is the cash flow different year 1 versus the horizon year, Greg?
Well, the beautiful thing about this asset class is that it gets better with time. All of the profit centers get better with time. So what you see is that your cash flow grows from year 1 to year 10.
Got it. Okay. I was hoping you would just say rent goes up and your mortgage stays the same.
There you go.
You continue to make more cash flow. That's what I'm seeing at least.
There you go. There you go. So that's a beautiful thing. So then of course the third step is we have to work within the budget. So returns, cash flow, budget. So now that we know that, let's take a look at these properties. Now, these are 5. This client had $70,000. We absolutely are going to respect that, right?
Yeah.
No reason to go to this client and say, hey, let's go buy these 5 properties. It's not possible, right? Now, out of these 5, how do we choose the right one? Well, now we know the framework of how to do that. I'm going to show you how easy it is on this portfolio generator that we have. So we just simply come over to the right-hand side here, and this breaks down each of the different assets with your total initial investment and your net rental income. And I'm going to show the return on investment as well. All right, so we're going to start here. Which of these 5 assets is the right asset for the client? Well, let's look at the highest returns first. 11.2% on 38th Street. And that's the highest. So we're going to start there. Next, we're going to go to net rental income. Now, here's the thing. On the calls, we'll be able to share this with you, but all of our properties are cash flow positive year one. So this net rental income that I'm showing you here is oh, you know what? I probably need to go a little bit to the right there. A little bit to the right. There you go. There we go. This net rental income that I'm showing you right here is what does it look like at the horizon year? So what does it look like at the 10-year mark? So the net rental income here is positive for this property on 38th. We saw it already had the high returns, the highest returns. We're looking good there. Now we're looking for total initial investment. A total initial investment actually is taking into account your down payment, your closing costs, all of the costs that would go along with it to make sure you're fully prepared. And you know what? We're close here on the initial investment, but the client told us how much money they have. We're going to respect that. We'll certainly have the conversation and say, this could have been a choice for us, but we're going to be prepared to make sure we come in at budget or under budget. So for the purposes of this call, we're going to say that that one doesn't work because it didn't meet the $70,000 threshold. So what do we do next? We look at the next one here on Cocoa Avenue, 11%. And guys, I should probably tell you, you know, it's easy to say, oh, one is so much better because it was 0.2 or 0.5 or even 1% higher. What we also need to know is that any of these returns on investment that are similar are good, right? The chances that each of these are actually going to be exactly 11.2 or 11% or 10.2% in 10 years with all the variables, that's not really how it works. You want to be close to that number, but there's no reason to get super excited about 11.2 versus a 10% return elsewhere.
Got it. The way that it was explained to me, that made a lot of sense. As a sports fan, this is about getting on base, right? Like if you're thinking about baseball, this is about like putting the ball into play and getting on a base. You know, all of these are going to get you on base. Some will be singles, some will be doubles, some will be triples, some will be home runs. But the bottom line is like, once you start loading up the bases, they all come home.
There you go. Yeah. And the one that is at, 8.6% here, listen, it could be the winner out of these 5. The ones at 11.2%, it could be slightly less. You know, once you're within a couple of percentage points or whatnot, you just want to get on base, just like you said there. All right, so now we're at 11%. The next criteria is their net rental income at the horizon year. There is. But you know what? This one is $91,000 out of pocket. We're going to move on to the next one. Okay. Now we're going to go for the next highest, which is Hartridge Street at 10.6% returns. Does it have positive net rental income? Absolutely. And now does the total initial investment fit within the budget? And we've got a winner here, guys. So it's as simple as that. What we do is we then come back to the portfolio generator, and here's a little bit behind the scenes that my team would be managing for you. We would adjust what your binder deposit would be. And now we're right back here looking at your property here to show when we start with 1, exactly within the budget that you laid out, we're going to take this roughly $70,000 investment over 10 years. It will have a portfolio value of about $183,000.
There you go. Okay. So that is basically the decision-making tree. You basically showed, this is the live demo kind of like worksheet, right? Like how you go from the goals and resources. That's the first input in there. Then it cross-examines that to the available inventory, which you showed a bunch of it. You have a way to analyze it, and then it pops back into the thing that shows you what your return will be for your action.
Absolutely. And obviously for our call here today, we won't have time to go into all of this information. Would highly encourage you to get on the phone with the team if you'd like to see a little bit more behind the scenes. This is something we share with everybody on our calls to be able to put the plans together. But you can see here, there are more properties, and we can find out beds, baths, parking, square footage, rents, taxes, insurance, all of these things, home price appreciation rates, expected maintenance costs, and even picture of the property. So there's a lot more here, obviously, for the purposes of what we're accomplishing today. Won't have time to get into all of that.
Got it. Is this something, so Barry's asking, is this something that you give to your clients afterwards? Like, can you have a copy of the spreadsheet, not just the PDF of it?
Yes, absolutely.
Okay, cool.
Well, you get the PDF. The spreadsheet, no, it's password protected. So it wouldn't do much good for you.
Got it.
And you probably wouldn't understand how to work it. There is so much complexity to build this thing.
Greg is the type of guy that watches the Excel World Championships. And
I did send me that.
Yeah.
Or you send that one to me.
I sent it to you,
Yeah,
and I
yeah.
think you sent it to your wife to see what I mean. This is
And then that was my date. I tried it out with my wife. It was fantastic.
That was your date. That was your date. All right, JC. So then tell me, talk to me about kind of like the process that this client went through. So is this what she ended up picking? She bought one property here?
She did. And let me just kind of go through the important things that you'll need to know for this one asset. So I'm going to stay on this slide here. And these are things that we'd be talking as we're preparing you to be able to make that purchase. We're going to talk, of course, about your down payment. And so for this client, this was a cash flow positive property with only putting 25% down. That may or may not work for each property, but we have the ability to change from 25% down, 30% down, 35% down, 20% down, based on your goals, your resources, and then also how much positive cash flow is the property kicking off. Then we're going to be able to understand what are your closing costs. Your closing costs may also include a buy down of the interest rate. That might be the right thing for you too. And so we're going to be able to understand those closing costs. There are always prepaid taxes and insurance costs that the lender is going to require. And you can see here that that comes out to about $1,400. Some of these numbers are large. Some of them are not as large, but I can tell you, if you get to the closing table and you weren't expecting $1,400, we don't want you to have that experience of just that little bit of deflation when you get to the closing table and it was more money than we told you were going to need. So we do our absolute best to put everything that we see on a closing statement here before you ever make that decision. You're also going to see a prepaid tenant placement fee. This is the fee that you pay in order to have your home rented, and all of your homes that you buy with JWB already come rented. That is a part of the passive experience there. So there's your prepaid tenant placement fee, and all that totals up to your total initial investment, which again comes to a little bit under $70,000 here.
Got it. And Sam Samander, who's clearly an experienced investor, is saying, all this depends on your operating expenses, conventional 30-year fixed rate, loan licks in principal and interest. The variables are insurance, taxes, utilities, HOA fees, et cetera. Is that in here, GC?
Yeah, absolutely. I'm so glad Sam asked that question. All of that is right here. And so we usually do take some time to let you know how we got to how this fancy spreadsheet works, the behind the scenes figures here, but I'll just kind of list out, so this property has a 5.48% interest rate here. You can see that. We get all of our rates quoted every single day and every single week to make sure that those rates are accurate. You can see things like your year one rent. I mean, it's already rented right now, so that's very easy to understand. This isn't an estimate. This is based on a lease, like somebody's actually renting this home right now. Property taxes are something that we can calculate because of our experience in the neighborhoods. Insurance costs, we already have this quoted ahead of time for you by our insurance team so that you know what your insurance premiums are going to be. And then, of course, if you go down the line here, you can kind of see things like maintenance cost, vacancy cost, rent price appreciation, home price appreciation. And if you'd like more information on how we get to all of these numbers, we're happy to walk you through all of that and the data that supports all of these numbers here.
Got it. Barry's saying that 5.48 yesterday was like 5.75.
Yeah, things can change on the daily when it comes to interest rates. Now, this is for an average client, a typical client. There are so many variables that go into what your interest rate may be. Your credit score may be higher. Your credit score may be lower. So this does not mean that every client is going to get 5.48. It's certainly dependent on your individual situation.
And there's like opportunities to buy stuff down and things like that, right?
That's a good point as well. So this assumes a buy down with the rate as well. And you can see that is reflected in the closing cost line item here, that this roughly $13,000 of closing costs. There's a healthy part of that is the buy down of the rate to get it down to 5.48%.
Got it. So this investor bought down the rate as well.
Absolutely.
Got it. There you go. Alexi Rivero is asking, is there a minimum initial investment an investor should start with, GC?
There's not a so-called minimum. You're buying one asset right off the bat. So it's a function of whatever your down payment, your closing costs are for your investment. However, just a rough guideline at a minimum, think about maybe $50,000 at the bare minimum It can likely go up to about $75,000.
Got it. GC, are we going to share anything else here, or can we talk about the next call after this?
Well, I do want to share one more thing though.
Uh-huh.
Okay, so this client, if you remember their goals and resources profile, they shared with us that they were looking forward to contributing $100,000 next year into this asset class. So when we heard that, we said, you know what? Let's talk to this client about how beneficial it is to front load your portfolio. Front load your portfolio means if you are already earmarking money to put into this asset class, you can set yourself up for a big financial win by putting that money sooner. Just like the 5 profit centers get better with time. When you start earlier, a year, 2 years, 3 years earlier, you're going to have a significant advantage, especially when you buy in an interest rate, which is a high interest rate environment. Again, we've done more training on this, but actually buying in a high interest rate environment is a smart move. And the reason is because when interest rates go down, home prices go up. That's what the data shows. So we talk a lot to our clients about front loading. And when we see that clients have the money available, we're going to do our best to help them understand how could this set you up better. The other thing about this is that there are significant incentives that come along with buying multiple properties at one time. And so when we saw all of this, we said, let's sit down with this client and say, you know what, here's the one property we're recommending for you. But if we did want to front load this portfolio and take advantage of these incentives, here's what this could look like. And so with that same thing in mind, we would have put these 3 property recommendations together for this person. So let me just look at my little cheat sheet here and come back here and show them, put this 3 property portfolio together. And by doing this, we said, you know what? If we were to put 3 properties together, we'd take this $190,000 roughly and turn that into about $490,000. What we would also do is we would be able to take advantage of incentives. So for each property that is purchased right now with JWB, you get between $4,000 to $6,000 of incentives. You can use these incentives to lower your maintenance costs in the future or buy down the rate, however you'd like to do it. But these incentives are a part of every purchase. That's if you buy 1 property. If you buy 3 or more at a time, you get an additional $4,000 to $6,000 on every purchase. So because it was in line with this client's goals and the money is already earmarked, we said, all right, client, what if we were to do this? How much farther would this set you up? Do you feel comfortable with this? And the client was really excited about it. So this was a great example of us working together to accomplish those goals. We were able to shave years off of her retirement goal by getting her to start earlier with 3 properties. And she walked in with $36,000 of incentives over those 3 properties.
Very nice.
So, so that's actually where we ended with this client. They ended up buying 3 properties and have been super excited and are already over halfway to their total portfolio goal of 5 properties.
Look at that. So that's the value of knowing the goals, knowing your resources, building an actual plan, not just selling you a property is what I hear there.
There you go.
All right. So that is okay. So you just stopped sharing. Look at you doing
How about that, huh?
Kind of took me for a loop there. All right. So that's call number 3. That's when you get to the actual, that's when you get the actual picking of the properties. Call number 4 is.
Let's get started. You'll have the opportunity to select and select your properties on call 3 or call 4, let's call it. But either one of those, you're going to be fully prepared and hopefully excited to move forward. So we'll collect a binder deposit at that time, either on call 3 or call 4 with you likely. And the initial binder deposit is a $5,000 binder deposit. Each additional property is a $2,500 binder deposit.
Got it. And we got a couple of questions I want to get to, but real quick, for everybody to see, this is just kind of like typical JWB inventory that's currently available. There's these homes, some are remodeled, some are built to rent. Somewhere in the minimum investment of around $50K, that's what you're going to need for a down payment and closing cost. Typical IRRs, 9 to 10%. Interest rates right now, recently as low as 5.4%. And you said there was multiple incentive packages. You want to talk through that?
Yeah, absolutely. So every purchase, again, comes with an incentive of between $4,000 to $6,000. And that goes towards your JWB maintenance credit. That is a check that comes to you within your first month of ownership. And you get to put that right, hopefully into your reserves account, knowing that maintenance will be coming at some point as an owner of rental property, but it's taken care of through this incentive. For those just like this client, if we can work with you and help you get to your goals faster and you can buy 3 or more at one time, then you get an additional $4,000 to $6,000, which typically will then drop your closing costs or help with the rate buy down. So this client was able to walk in with about $12,000 per property of incentives. Again, $36,000 of incentives right off the bat.
Love it. So that being said, again, you are a Fortune Builder student. That means that this is a free service to you. If you want to go through this experience, choose any of these options. You can just call JWB right now at 904-677-6777. You can text them 904-293-0341, or choose your own adventure by scheduling an appointment here at jwbrealestatecapital.com/FB for Fortune Builders. And before we get to all the questions, we do this every Tuesday. We do educational shows. They're entertaining. We got people that show up every single week. We have a lively community. We do a yearly event. So if you want to join us on Tuesdays, we'd love to have you. Greg and I really love it. And I think anybody that's here that does that will tell you it's a good time. He's a lot funnier when he doesn't have to present one of these things. So that being said, let's get to our questions. Will Horry asks, is it advisable to pay down the mortgage balance with tax refunds or save as down payment for another property?
It's a great question, and the answer is it depends. This is the value and the benefit of having a relationship where we understand what your goals are and we understand what we're working towards. If your goals dictate that your target number of properties is higher than what you're at right now, then just a general answer to give you one over the call here is that it's probably better for you to invest in another property because you haven't reached your target number yet. If your goals dictate that you're already at your target property, you've already accomplished phase 1, the acquisitions phase, now you're in strategic debt paydown mode for most of you. That's where that same tax refund might be better served to actually pay down your properties. And we can help you choose the right property for you to pay down, because if you pay down one over another, you're actually going to significantly reduce the amount of time for paying down all of them. So these are the type of conversations we love to have with our clients. So I would encourage you to jump on the phone and we can look at your specific situation.
Got it. So that being said, I was asked what were the numbers again. I just put them in the chat, but you can call 904-677-6777, text only 904-293-0341. Alexi wants to know, should we come in pre-approved?
It's not necessary. We're going to work with our network of approved lenders. That's somebody that we're going to match you with. So hopefully we're in the same network, but it's very likely that we might not be in the same network. So don't worry about getting pre-approved. Just come on over to us. We'll make sure that we make that introduction, get you pre-approved before you get ready to buy.
Got it. Sam Samander says, are we able to leverage the Augusta rule for the JWB properties or enjoy them as vacation rentals for ourselves?
I don't know what the Augusta rule is.
Okay. Well, patron Michael Santorius says the Augusta rule says your home can be rented for no more than 14 days a year. So probably a no for this business model.
There you go. Yeah, this is all about long-term rentals. And so we sign long-term leases with your residents.
Yeah, so you sign long-term leases. For example, Sam, my residents are there with 2-3-year leases, right? Like you guys sign, no less than a 2-year lease. Often it's a 3-year lease. They have an average resident stay of 4.5 years, right? Because it's all about minimizing turnover. So I'm not going to go in there and like say that I want a vacation with them, to be honest with you. And the truth is that one of the beautiful things about this asset class is that you're investing in working class housing. These are homes that are housing a family that's going to be there long term, and they're going to be there for a while. It's not really like the place that you want to go vacation, right? Like these are just like working class neighborhoods close to logistics centers, airports, naval bases, things of that sort. The people that live there, right?
It's a great question, and it's important to separate. This asset class creates wealth for you, so then you can go and buy your ideal vacation home where you would like to go.
Yeah. Terry Nichols says, how do you know Jacksonville is the best market area?
You know what? I love that question. I wish we had more time to get into it, Terry, because it's something we dive into often. But, you know, when I'm thinking about the best place for me to put my money, I want to make sure that number one, it pays for itself every single month. And then I want high upside, right? So I want to make sure that every single month I'm getting positive cash flow, that it's paying for itself. And then once I've accomplished that, if I have to, you know, the additional cash flow above that is not nearly as important to me as if I can get a lot of home price appreciation.
Yep.
That's how you actually build multi-million-dollar portfolios for clients. So when you look at all of the options when it comes to markets across the country, you typically have to choose. You can either get a high cash flow market, which has no growth, or you can get a high growth market, which has negative cash flow. The reason that we love Jacksonville and that we have all of our rental properties here in Jacksonville, along with all of our clients' rental properties in Jacksonville, is because it's this beautiful median. You've got positive cash flow, which is number one. We want to make sure it's an asset. But the growth here in Jacksonville is so much higher than these other cash flow markets out there. So much higher than Indianapolis, Cleveland, Memphis, Kansas City, you name it. Jacksonville has more home price appreciation here, and it has over the last 40 years. So that combination of positive cash flow, high growth is why Jacksonville is the choice in our opinion.
Got it. Terry, so Leslie Wilson is asking here in the chat, the Q&A, do you only show a client properties that fit their initial investment and goals, or do you only have a limited number of properties for sale at a certain time? Also, I understand that you have build-to-rent properties and owner-occupied properties for sale.
Yes, the Maven has another awesome question like normal. So on that actual sheet, if we had more time, there's actually about 15 properties that we actually can go through with the client. So we typically have about 15 properties or so that are for sale at any point in time. And we're happy to go through all of them. In the interest of time today, I prepared ahead of time, and we would prepare on the call ahead of time and say, you know what? These are the 5 that are most likely going to be the fit for you. And then we will show you the 1 that works for you or the 3 that works for you. But if you have questions, you say, well, why not property 10? Why not property number 12 or number 2 or whatnot? We'll go right back there and we'll say, well, again, let's look at returns first, then let's look at positive cash flow first, then let's look at budget, and we'll land in the same place. So I think it's a really cool thing for people to see, to have transparency, that it's not just the one property that we're choosing. You're going to see the mindset behind why we're choosing this one for you.
Got it. Will Horry is asking, what's the average age of the properties in your portfolio in Jacksonville? I assume that he's asking, what's the average age of the properties that you're selling in Jacksonville?
Yeah, and this is a great question on the heels of Leslie's question too. So we have a lot of new construction properties, so literally built in 2025 or 2024. About 75% of our inventory is brand new construction. And then we have about 25% of our inventory, which are renovations or existing inventory. In Jacksonville, your existing housing stock is largely built in the 50s, 60s, and then your brand new construction is obviously brand new. So the average doesn't really play between both. Just think 75% is brand new, about 25% is built in the 50s and 60s. Yep.
Yeah, got it. I was just going to say, these guys, Greg and his team, kind of invented the build-to-rent model. Like, they've been on the front page of the Wall Street Journal twice because of it. I think in 2014, you guys kind of started doing the math and you thought, I can bring properties out of the ground, get them rented, and get them sold as investment properties kind of before everybody else.
Absolutely.
Yeah, so that's why, and Jacksonville is unique in the sense that it's not a very dense place. So they figured out how to do this. Most build-to-rent communities are like communities being built to rent, right? Like, there's a large tract of land, you burn down a forest and you put in 100 homes.
That's not this.
That's not this. This is like, there's blocks that just have empty lots that these guys have stockpiled, and they figured out something really, really unique, which is how to fill in neighborhoods with homes that already exist, these neighborhoods close to the urban center where there's jobs and all these different things. So it's a whole different type of portfolio, but it's also a new home, which is really interesting.
There you go.
This is called urban infill projects, is what Leslie's saying. So very cool.
She's right.
So Will said 75% is new. Awesome. Thanks. All right, there you go. 75%. Barry is saying all 5 of his deposits were built in 2024, 2025. So Barry went new construction.
Congratulations.
Terry Nichols is asking, is the positive net rental income used as part of the qualifying for the loan?
Not necessarily. It depends, again, on your situation. We'll match you with the right lender and the right loan product. So we're first going to try to do a conventional loan because that's going to have the absolute best terms for you. Secondarily, if that loan doesn't work, then there is a loan product that would use the net rental income to be able to qualify for the loan.
And last question, Terry says, I live in Southern California. I would like to invest in a property closer to where I live. What do you say about that?
There's pros and cons to everything. If you are looking to grow your wealth and you want it to be managed for you, then I would encourage you to look beyond your backyard. What you'll find is in Jacksonville, you have that beautiful balance that I just described. You just don't have that in Southern California. You may have high home price appreciation over the years, but certainly going to be hard for you to find positive cash flow. And I'd pretty much eliminate the ability to do that if you want it professionally managed for you. So it's all about what's important to you. If you want to be active, you want to do all the work, and you want this to be something that's going to be cash flow negative for you and just bank on the growth, you'd go to Southern California. Our clients are going to want to basically do the opposite. They're going to want it handled for them. They're going to want to pay for themselves, or pay for itself every single month. And they're going to want this thing to grow substantially. And that's why they choose the Jacksonville market.
Got it. And Carolyn Durant Hall says, if you own 5 plots of land, would you be able to do a build to rent there? So it looks like she's got some plots in the surrounding areas of Jacksonville.
I think she's asking if she owns it,
Yeah.
would we build the homes for her on the home? And no, we wouldn't do that. We run a business that is so systemized because we want to deliver the same wonderful experience for everybody. So we don't manage to exceptions. So we wouldn't be able to or we wouldn't be able to build a house on your land. But if you do end up building those homes and you do need property management services, give us a call, because we can manage your home even if you didn't buy it through JWB.
There you go. So I have the screen here. Again, this is a free service. Go ahead, just book an appointment and kind of like talk through this. It's part of your Fortune Builders experience to like see what it feels to work with a professional company like JWB. They have pre-vetted them so that they can build a portfolio for you and see what it looks like. You can call, text, schedule an appointment, whatever you like. GC, I would just say kind of like lessons from owning 400 rental properties yourself, helping thousands of people. Terry's asking, what is the JWB maintenance credit?
Yeah, so every property gets this JWB maintenance credit now. And this is in relation to the interest rates being higher for longer than we all want. So JWB has stepped in and is giving this maintenance credit to make sure that we stay positive cash flow for you. So every property you buy right now, you put under contract, is going to receive between $4,000 to $6,000 depending on the purchase price. And that's just a check that is sent to you within your first month of ownership. And again, if you buy 3 or more, you basically double that incentive. It's $4,000 to $6,000 times 2, so $8,000 to $12,000 per property for those incentives when you get to 3 or more.
There you go. Carolyn wants to know, can she sell the lots to you?
Yes, absolutely.
Yeah, you guys buy lots of lots.
We do buy lots of lots.
Lots of lots. All right, GC. Final piece of advice here as we're getting out of here. You own 400 of these properties. You've kind of like done this 6,000 times. Anything that's like the big takeaway here?
For me, it's focused on experience. When you are getting into rental property investing, focus on experience. When you go into this, think of the other person who's managing this for you as a steward of your money. Who is going to be a good steward of your money, and who is going to make this experience enjoyable for you? Because this asset class can do so many good things for so many people. It's doing great things for you. Yeah. It's doing great things for me. It's doing great things for the clients that we have on the show here today. So it's not a question of, can rental properties make you money when you buy and you hold? The question is, can you surround yourself with the right team to have a wonderful experience so that you're going to stay in the game? If you walk around wherever you are and you ask somebody who's owned rental properties for 10 years or 20 years, ask them if there's a bad investment there, you're not going to find somebody who says it was a bad investment. It's just not going to happen. So the key here is experience. Surround yourself with a team that is worthy of being a steward of your money, who has done this thousands of times and has a repeatable process of success. And that's what we aim to do.
Yeah, it's all in the hold game, right? Like when I've like gone around and like taught this stuff, like kind of the whole thing is focus on the team first, because the team's going to keep you in it. I can tell you, I've been doing this now for like 4 years. No matter what you do in rental properties, you're always going to be faced with this decision of, do I really want to take this money out of my bank account to put this back in here and hold on to this or not? And the number one thing that keeps you in this rental asset class is you looking in the mirror or looking across the table to your partner and saying, we've got the right team on this, right? Like I don't have to, we just got to cut this check. We don't have to worry about it. These returns are going to happen as long as we stay in this thing. So I always encourage people to take JWB up on this offer of this like free call, because now you get to see with like a professional company that really focus on experience, how they onboard you. And if you can start kind of like comparing this thing to anybody else that you do it, you're going to have a much higher standard, right? Like if your first relationship out of high school, you fell in love and it was a great relationship, you're now going to have like this like awesome standard to compare people to, as opposed to if like you're in like a toxic relationship, you can just fall in love with anybody, right? So fall in love with the right person.
There you go.
It's a little much, a little much.
A little much,
A little
heavy.
much,
I mean,
much. Just there's some personal stuff happening there. That being said, thank you for taking an hour and 10 minutes out of the middle of your day to come here learn about real estate. You know, you're already surrounding yourself with great people by joining Fortune Builders. Come join our community. Come join us on a Tuesday call. It's a lot of fun. We make a lot of connections. We have a lot of lifelong friends that happen in this chat here on the Zoom call, and you will continue to get educated. You'll continue to learn more and more things. I was not somebody that knew anything about real estate. Now, because of the show, I have a whole bunch of friends that are in real estate, and I know a whole bunch about it. So we like to sign off all of these with one piece of advice. Don't be average. Yeah.